video on exhaustion. I wanted to do that now because the XRP trade is kind of fresh, and we spent a good bit of time in the Discord talking about the setup. If you kind of look at my XRP chart, I'd mentioned this chart's not actually updated. I'd mentioned this level right here is right around like 49.495. And I'd mentioned in the Discord, we either want to reject this area outright or we want to get a blow off top above it, and the entry would be acceptance below it. As it turns out, we did not get a full break of the level, but I wanted to go through and explain how I kind of picked that level, why I felt that the top was in, and why it was just a matter of time before this had a significant pullback. So when you Google it, you get a very straightforward explanation. Essentially, exhaustion can be on either side when you have something that's making a move or trending. If you're trending up, then buyers are going to exhaust, meaning before a reversal, meaning there's just less buying. They're not aggressively buying. So if you look at something like, I always think about Soul during the last bull run, it would just rip and rip and rip. And essentially what was happening was buyers were just buying every dip. Volume kept just going crazy. FOMO, you had a continuation because you had buyers continuing to enter the market. Now, exhaustion can happen, as it says, low time frame, high time frame. It's more of a matter of just identifying a trend with buyers, and then when those buyers just kind of stop or start backing off. I look at kind of the speed of things sometimes. So, for example, when you have, like down here, when I mentioned XRP in the morning that I thought it was going to pop and I wanted to get long, you can see here when you have a move up that's one candle and then it takes three candles to bring it back, right? You get long up candles and then short, slow, red candles. That to me is bullish, and to me it tells me that buyers are stronger, and so that's one of the things that you want to look at when you zoom in is not just whether price is going up or down or whether price is chopping, but how is it chopping, right? Like which side is being aggressive. And so here on this downturn, you can see large wick at the top. That is a very bearish candle. And the reason it's bearish is because it's indicating to you that sellers are the aggressors here. When every time price went up, sellers jumped in. First thing I do when I'm looking for a top is I zoom out. And I'm going to zoom out. I'm going to see here that this is a big level. And there's a massive volume shelf here. And I'm going through this process again because I want to make sure that you see how I get these levels, right? Because I'm not just randomly pulling these levels out of thin air, right? It's much easier to say, oh, zero point 0.5, but my level wasn't zero point 0.5. My level was somewhere, and of course, like, some of these things aren't, you don't have to be down to the, to the exact uh, level, but it was somewhere around that 495. And the reason is this volume shelf right here. Now, when you zoom in to this area, you've got a lot of confluence. So for me, I'm putting it this level right here where these bars close is obviously the perfect level in retrospect, but I actually had my level slightly higher. So let's put it there. So I zoom out, I look at this very key level, and the reason I like this level is because if it breaks up, it's going to six. It's going to zero point 0.6 in all likelihood. And so there's a lot of orders, a lot of traders here. A lot of people are going to want to take profit. A lot of people are going to want to short it. And so you're going to get a reaction. XRP was very, very unlikely to just blow right through that area. And so there's a safety in that because you can enter a short, take some profit on the pullback, and if it ends up blowing through it later, then you get out break even or you take a small loss. If you try to enter outside of this key area, then you just take a huge risk of not really knowing where it's going to go. So you zoom out, you get your level. When you zoom back in, you can see we didn't quite reach my level, but there's an entire zone of volume between 0.49 and 0.4967, and so that whole area was an area of interest. You can consider this a blow off top in retrospect on this higher time frame, but we didn't have that information when we got in. So how did I choose to take this entry right here? And when I alerted it, so our entry was 0.490, which is right here after the bad fill, right? I mean, that's no, my fill was 4891. I opened it, I got filled bad, but we caught the top. And well, as you can see, we're still actually in it. It's going really well. Uh, and it was a really, really good trade. So, but this is what we were looking at. And I mentioned I could see a blow off top. I entered here and I said, listen, if I get stopped, I will wait for that blow off top and my re-entry will be acceptance back below this level. And I'll just re-enter. And at that point, I would have re-entered max leverage because there's really no, like, that's it. Like, if it goes up again, you're wrong. So taking a small loss is okay because I felt comfortable that I could make it back if my trade was right. And if my trade was wrong, I'm still limiting to a specific dollar amount of risk on the idea. So this is what we have. each push up has less volume. That to me is a very, very clear sign of exhaustion. When volume doesn't increase with the move, that is a telltale sign of exhaustion. Now, when something like this moves up, it's moving up largely because of stops and liquidations. And so a lot of this volume, these like bigger volume candles, are made up of stops and liquidations. But regardless, you have a very clear downtrend in volume. The entry that we took on this, and the reason I jumped the gun a bit and got in before this level and before confirmation and before a real drop, was because I saw some orders coming through on Bitcoin. I had a very high degree of conviction that Bitcoin would drop, not a huge drop, but $15-20. And that to me was enough to test the resilience of XRP. If I was right and Bitcoin dropped $15-20, I expected XRP to drop more percentage wise. BTC did end up dropping. I think it dropped like 30 or 40 dollars, and we got our drop, and that was it. Like there was no, we actually re-entered here. I think the re-entry was 471, and we took some nice profit, and we ended up getting stopped out, and I wasn't watching it, but I would have probably re-entered there. But you can see uh, here on that re-entry, right? Like that was a clear area. If we broke past that, then I would expect this high to be taken out and at least retested. So we re-entered here. We took some profit. I probably should have left my stop loss at 30% instead of going to break even. But I had the main short and I wasn't willing to risk it. But now you've got a real steady sell-off. So the key to the exhaustion on this particular XRP trade was this decrease in volume, the decrease in the movement. So I kind of eyeball this, right? But you've got essentially this breakout, which was 9.6%, right? And then you go and you say, okay, well, this breakout, 7%. And then you say, this breakout, 4.3%. And then this breakout, 2.7%. Now, I'm not going through and measuring these things in the trade. I can see it. But if you're new to trading, you need to start looking at these things, because the fact that each move up was smaller, both in percentage and volume, is telling me that buyers are not flocking to this coin at the same rate. There is exhaustion. Now, that doesn't mean that you're going to catch the reversal, but it does mean that less and less and less buyers are coming in, less and less and less shorts are getting wrecked, and therefore you have exhaustion. That is the definition of exhaustion. There's less buyers buying, there's less sellers getting wrecked, and therefore you're nearing a reversal point. Unless it changes and all of a sudden there's some kind of catalyst. If the SEC had announced here that XRP won its lawsuit, then buyers would have flocked in, and exhaustion at this point be damned. It wouldn't make a difference. But the fact that each move up was smaller, the fact that each move up had less volume, and the fact that we were nearing a key resistance, that's why I entered the trade. Now, moving forward, what do I want to see? Fibs are essentially a calculation of percentage shift move. And so you see how sometimes I just measure the moves. Right now, I'm really looking to see what happens when we get to this golden pocket. Certainly, this 50% might get a reaction, but ideally, I want this 618 level. I think that's the ultimate target for the short. I'm probably going to be out at 0.42. That's my final TP on this trade. I want to front run it a little bit. And what I'll probably do now that I look at it is I'll change my next profit target to 432 and then my last one to 42 and let it ride, and see if we get them. My stop loss is in profit. I will likely move my stop loss to 0.47 above this 236 level. But at the end of the day, once we accepted under this 236 level, that was further confirmation to add to the short. So at this point, as long as we stay under this 236 level, I fully expect the 618 level to hit. Obviously, we have FOMC later today, so those things change. But that is how I look at a trade like this. I'm looking for a key high time frame resistance. I'm looking for signs of exhaustion, and we got it. Let me know if you have any questions, or if you have any examples of exhaustion that you want to check out. You can either join the Discord, or comment on the video. Thanks.